Thank you for your interest in Zach's Healthcare Innovators Investor Service. That's a mouthful. And so I suppose now that you've tuned in, you want to know just how the service works, what the particulars are. That's why we've called in the editor of the service, Kevin Cook, to sit here and just give us the rundown on what you can expect when you delve into Healthcare Innovators here at Zach's. So this new investor service, from what I can understand, has kind of a unique approach, Kevin. What can investors expect to gain looking at this particular sector?
Well, the big thing they're going to gain is more exposure to healthcare. This is going to be a long-term portfolio where we can own 20 to 25 stocks.
Okay.
But the best news is that not only is the bull market not over, and the economic run, the cycle that we're in is not near recession, but the four main drivers that I've been beating the drum about for almost 10 years now in healthcare are still there. I call it boomer power, science power, earnings power, and M&A power. If you don't mind, I'm just going to go through each of those real quickly.
Sure.
So the boomer power is we've got an aging population living longer.
Right.
What does that mean? They're going to require more medicine, more care, right? Grandma and grandpa are living into their 90s. They're going to need more care, more medicines, and that continues to drive companies to do more R&D. So that brings in the science power, right? And right now we're at this. There's a revolution going on right now in some of these medical fields and research fields with immuno-oncology. Using your immune system to cure your own cancer.
Yep.
Just incredible things that offer everyone has a 50% chance of getting cancer in their lifetime just because there's so many different cancers, right? And we're exposed to so many different things. So to think that they can engineer your immune system to possibly cure you and avoid chemotherapy, radiation, or surgery is just fantastic. That R&D power, that science power, generates earnings power for these companies. When you think about if they can come up with breakthroughs that save lives, they're going to get paid for it, or they wouldn't invest, right? And then the whole M&A story. The big companies, a Merck, a Pfizer, Bristol Myers, they face what we call patent cliffs. Things are going along fine with their sales and revenues, and all of a sudden they lose the patent, the generics can take over, and that's a cliff for their revenues.
Sure.
And it happens, every year to some big drug company. So they have to be out scouring, looking for the next company that they want to buy. So those are the four big drivers. They're still in place, and they're still going to create tremendous profits for the next 5 to 10 years.
You've been looking at healthcare and biopharma since I've known you anyway, and since we've worked together. So your investing background specifically in these two sectors brings some unique skills and experience to the table as editor of the service. So by following you specifically, what do the investors gain?
So I have a pretty detailed research process, and I don't have a life sciences background like some of the analysts do, and obviously the heads of the companies do. I don't have a degree in microbiology, but I try and pay attention to the people who do. So the big things that I look at that tell me where the money's going into a particular company, into a particular stock, into a particular industry are, what are the big pharma companies doing? Because, as I mentioned, a Merck, a Pfizer, a Bristol Myers, they'll be looking at the smaller companies and partnering with them. I call that when they act as their big brother to the little guy, right? They come in and say, we like what you're doing with that R&D. In fact, we'll pay you to keep doing it. We'll give you milestones for each achievement you make in phase 1 trials, phase 2 trials, et cetera, because they want a piece of the pie, because they're trying to ward off their own patent cliffs and get new drugs in their pipeline. So the first thing, what are the big pharma companies looking at? Second thing is, I read the Wall Street research religiously. Most of the good investment banks that have a good biopharma research desk, those guys are PhDs. They do have degrees in microbiology or genetics or the life sciences of some kind. And so they understand the research that's coming out of these clinical trials. And then the third thing I like to look at is, what are the institutions doing? Where's the big money going? For years, I've followed the Baker brothers because they're concentrated in investing in biopharma. But there are several other funds who will have 10, 20, 30% of their portfolios in these areas. So I see what they're doing. Where are they investing? Where do they continue to buy? So that's part of my process.
All right. What about all of this tumult in healthcare right now with Obamacare on the chopping block? Is all of this going to have the potential to make an entire sector uninvestable, if that's a word, for the foreseeable future?
Yeah, I think that's the myth out there right now, is that biotech peaked, right? The IBV went up to 400, had its 25% 40% correction, I should say. And it's having a hard time coming back, So is that the peak? We're never going back there. And I say no way, because you have to look at what's going on. Let's just take Obamacare. You mentioned Obamacare. Mm-hmm. The repeal and replace of Obamacare, politically, we're agnostic. We don't care. But something's going to happen. Whatever happens, it's going to create opportunity, because it's going to move one industry up and one down. And so you have new trends in place. So whatever happens with Obamacare, we can't control what happens in Washington. We just play off of it. And there's multiple industries within healthcare. We've talked about biopharma, biotech, but you've got medical devices, the hospitals. There's so many different places that money's going to move because of the mega trends I talked about,
sure,
the aging population and science power. So it doesn't matter what happens with the Affordable Care Act, or whatever new legislation comes down the pike, it's going to create opportunity, and industries are going to move relative to each other within healthcare.
What about drug prices? What do you see there?
Well, okay, so yeah, that's the next inevitable question. Before the election, we had one candidate tweeting about drug pricing and impacting those companies, and now we have the new administration tweeting about drug pricing. So that makes that creates some tiny event risk for companies. But if you ask me, do I think there's going to be big legislation that is going to mandate what drug companies can do? No, I don't, because we're entering a new era, hopefully, of less regulation. Mm-hmm. So are there companies that have abused pricing practices and bought a smaller company and jacked up a price 5,000%? Yes, they're out there. They will get targeted, and that's actually what's happened. Is individual companies with egregious pricing practices have been targeted instead of blanket legislation. Now, and the big picture perspective that I always try and get people here on pricing is that the insurance payers don't mind paying top dollar for drugs that work and cure people. The example I always give is Gilead with their hepatitis C drugs, Sovaldi and Harvoni. Initially, those treatments cost about $100,000 per cure. It's like a 16-week program, $100,000. The insurance companies gladly paid it. You know why? Because if somebody's liver was in jeopardy, they needed that cure, to save their lives, because a new liver installed costs about $500,000. I
like the way you put it, yeah. Installed.
So that's the big picture on drug pricing. There's still going to be opportunities. There's dozens and dozens of companies that are going to come out with breakthrough drugs, and they have to make a profit. They can't put billions of dollars into R&D and not realize billion-dollar profits.
Sure. You would think there's a strategy at work there. Talk about the basic portfolio structure with me a little bit. Now, all of this said, what can we look forward to as far as the basic structure of the portfolio and the objectives with that portfolio?
Yeah, so really important to emphasize, it is a long-term portfolio. So this is modeled on things that we've done successfully, like with Home Run Investor, taking a view that, hey, this is a stock I think I want to own for 1, 2, 3, 4 years, and it working and turning into a home run, a triple-digit winner, 100%, 200%. So we're going to be looking for companies that offer that kind of opportunity for long-term development. Hey, the company's struggling now. Maybe the sales aren't there, but the future looks bright, if they get through the phase 3. If the big brother biopharma company, buys them or latches on to their business and says, this is going to be a really successful drug. If legislation is passed, so you're always looking for all these catalysts that could make the mid-sized company, a $5 billion company, into a $25 billion company, for a five-bagger. And so definitely long-term thinking here. The other thing is we're going to hold many positions, 20 to 25 on average. Okay. So across many industries within healthcare. So that gives us, a lot of, I would call it diversification within healthcare, right? Because, there's going to be industries that will soar, for a period of several quarters, and some that just drift sideways.
So diversification still is one of the main objectives.
Yeah, within the healthcare, right? Because you can go to devices, you can go to drugs, you can go to biotech when it's hot, and maybe you scale back when it's not so hot.
Sure. All right. Well, we appreciate you taking the time to give us a rundown of some of these particulars.
Thanks for having me, Terry.
And thank you for joining us. Hopefully that's answered some of your initial questions that you have about Zacks Healthcare Innovators Investor Service. You can always count on Kevin to keep his finger on the pulse of what's going on in the sectors that make up the picks that he puts in the portfolio for this service. With Kevin, I'm Terry Ruffalo.